Hello and good morning, good afternoon, wherever you are. Welcome to the XRP quarterly ecosystem call with Token Relations. I'm Jacqueline Melnick, the founder and CEO of Token Relations, and joining me today, more importantly, is Ripple's David Schwartz, CTO, Bitwise's CIO, Matt Hogan, and Canary Capital's founder and CEO, Stephen McClurg. Guys, hello, welcome.
Hey, Jackie.
Hey, Jackie. It's so good to be here.
Yes. With that said, let's start with some background and context, and then we'll get into it. Over the last year, digital asset ETFs have accelerated the institutionalization of crypto markets. Bitcoin and Ethereum have led the way, but attention is now expanding toward assets with differentiated utility and real-world adoption. Since launching in mid-November, the US-listed spot XRP ETFs have surpassed $1 billion in assets, with consistent net inflows even during broader market pullbacks. So today's discussion is going to focus on XRP, specifically the early momentum around XRP ETFs, how asset managers are thinking about XRP exposure, and how network fundamentals and enterprise usage intersect with institutional investment theses. As I mentioned, we're joined by Ripple, Bitwise, Canary Capital to explore these topics from both, a capital market and network level perspective. So to start off from an institutional standpoint, ETF adoption is typically driven by a combination of liquidity, regulatory clarity, and underlying asset maturity. From all of your perspectives, we could get like a high level here. What do you see as like the indicators today, whether it's investor inquiries, market structure developments, regulatory signals, or something else that's kind of suggesting this growing momentum for XRP-based ETF products?
Well, maybe I'll start. When we launched, what's great about Canary and Bitwise launching the same products is that number one, we're friends. Number two, we typically are marketing to two different segments, and we're probably seeing two very different things. Usually when you launch a new ETF that hasn't been in the market before, it's usually retail adoption that happens first. So we've seen a lot of impact from the retail audience in the first week or two. And then we started getting calls from pension funds and insurance companies globally. And that's the second market segment that we market to at Canary. But we're seeing a lot of interest there. XRP is truly a asset that most of Wall Street and most of the global capital markets get. It's easy to understand. It's the rails for the financial system. So of course they're very interested. But those are the two segments that we've seen a lot of interest from.
Yeah, I would build on this and then add a note, which I think Steve will agree with on sort of ETF history. We love what Canary does, and we market to the financial advisor audience. So maybe that's, if you think of Steve on those polls, talking to retail, talking to deep institutional. Bitwise is maybe in the middle, talking to financial advisors, and their XRP appeals for very simple reasons. Look, it's one of the Mount Rushmore assets in crypto, right? It's up there. It's one of the big ones, has this tremendous long track record. And there are really two things that I found has appealed to our audience. One is that they're confident it's not going away. I know that sounds too simple, but a lot of financial advisors look at crypto and wonder, are these things for real? Will they persist? Will they be here into the future? And XRP has this enormous track record and this enormous background that gives people confidence it will be there in the future. And then towards what Steve said, it fits into real world applications that they can understand, right? They understand sort of the stablecoin space. They understand the cross currency and liquidity space. They understand and appreciate news like Ripple getting a bank charter and what that could mean for the XRP community. So they'll see it. And because it's such a simple case and because it's so real world, I think it appeals to people who don't make crypto their full-time thing. And I think that's really important. That's one of the reasons we've seen consistent flows despite the crypto market being down. The ETF thing that I would add, which I think is really interesting and speaks to something really special in the XRP community, is that while Steve and I just gave this good story on why Bitwise and Canary are both seeing flows, it's very atypical in the ETF world to have multiple providers doing well from an ETF perspective. And I think what that tells you is that almost uniquely in crypto, XRP really hits and appeals to multiple different communities, right? Often it is just one community that drives ETFs out of the gate, but XRP, because it's been around, because people know it, really already has sort of fans and or people who are open to it in these different categories, maybe faster than other assets. And I think that's why we've seen this kind of dual success from Bitwise and Canary.
Mm-hmm. Yeah, I was going to ask, how do you kind of compare this stage of the XRP ETF interest compared to what you two have observed with the Bitcoin and Ethereum ETF rollouts? We pulled up this chart here that shows the total net assets are about $1.12 billion as of the 15th. So give or take a little bit there. But is there similarities there? Or is it just kind of its own different thing that we can't even compare to Bitcoin and Ethereum?
Yeah, maybe I'll take a stab and Steve can add to that. I think it's sort of this third path, which is really interesting. The thing about the Bitcoin ETFs is that's a once in a generation thing. People have been working them for 10 years. There was huge anticipation. There were 10 that launched on the same day. It sort of signaled the institutional era. So there was a really interesting and strong, overwhelming demand dynamic there. XRP has been much better received than Ethereum was. Which is the interesting thing. The Ethereum ETFs sort of quietly moved out of the gate for a period of time and then found traction, maybe a year in. To see $1 billion in a down market is really exceptional. If this were a strong crypto market, that number would be significantly higher. So what I think it speaks to, again, is this simple story that is already understood by a relatively large number of people who were conditioned and ready for it. And it suggests, I think, there will be long and ongoing demand. I don't know what Steve would add to that.
Yeah, look, I mean, we were right there together launching, Bitcoin, and then we only, or in my past only focused on ETH futures. Ended up passing on launching ETH for that very reason. I didn't want to compete with 9 other people, and I didn't think it was going to be as strong out of the gate. But XRP, I knew it was going to be strong out of the gate based on the conversations we had. But that being said, again, it's like, Bitcoin was, the leading asset. It came out of the gate very, very strong. There was a strong track record, and we were right in the middle of a bull cycle. So you had all of those factors really helping that asset move. XRP, I believe, is going to be a divergent asset actually. There's been a lot of talk about, the 4-year cycle, and I know Matt and I have different opinions of the 4-year cycle of Bitcoin, but I'm in the camp of, yeah, the 4-year cycle is still in effect. Mining activity still very much drives price, even though it's becoming more and more muted. In every 4 years, it will become more muted. But my belief is that Bitcoin peaked in October, and it's already, going into its bear cycle. Altcoins typically follow Bitcoin, but there are a handful of assets that I do believe will diverge in this manner. And just watching XRP perform as everything's going straight down, and we continue to get inflows every day and continue to hold up, I believe that it could look like another peak in XRP in 2026, when most of other crypto assets are going to be down. And it really is the adoption curve here. What we're really seeing and understanding is the fact that there's so many advancements being made on the XRP ledger, including the stable coin that Ripple launched, which I think is really fascinating. It's one of the fastest, cheapest assets out there. And I hope David walks us through some of that when he speaks. But there's so many things being built, and so much of the Wall Street, when I say Wall Street, I mean, global capital markets, really understand what's being built there. That demand is being driven into the ETFs. And again, it was a fantastic launch. I've really never seen anything like it. Anybody who's ever launched an ETF before knows that if you can get to $5 million in AUM by the end of the first year, then you're rocking it. So crossing 300 million for us in the first, I think it was the first week, was fantastic. And but people understand it. And so I do believe that, again, handful of assets, XRP being one of them, will diverge and will come out on a different path, because even though most crypto prices I expect to go down in 2026, I expect there to be a lot of building, and I expect companies to do well, which is unique in this cycle, that companies are performing well and making money in the bear part of, the cycle. And given that everything that Ripple's building and everything that's being integrated on the XRP ledger, that price could very well reflect the performance of that ledger.
If I could just build on that, because even though Steve and I disagree on Bitcoin, we agree on the XRP
market cycle, right? Yeah.
We do agree on XRP. The way I would contextualize, because I think what Steve said is so important, is if you close your eyes and you imagine the series of developments that are impacting the XRP ecosystem over the next 12 months or 24 months, it is a series of positive developments, right? We don't know exactly what those developments are. Maybe David will tell us, but we can see the direction of travel, and it's related to real world activity, right? It's related to this tech rollout, which really is a separate news flow than we're talking about for Bitcoin, right? Bitcoin focused on macro conditions, focused on debasement trade. They're very different courses of direction. And it's hard to look at the XRP ecosystem and not imagine a series of these positive developments, of more real world use cases, of more progress from a regulatory front. And I would encourage people, as they're thinking about it, just to do that exercise, to think about what they expect over the next 12 months in each of these ecosystems. I do think XRP shines when you think about that series of developments and news flows.
Mm-hmm. Yeah, David, I want to bring you into the conversation. Obviously, now that XRP ETFs are live and investors are paying close attention to them and the fundamentals behind them, from a protocol and economic design standpoint, what are kind of the problems, the XRP ledger is optimized to solve for, and how does that kind of go into this roadmap that both Matt and Stephen are mentioning?
Well, the XRP ledger was originally designed back in late 2011, early 2012. At the time, the only digital asset was Bitcoin and direct clones of it. And the only thing you could do on the blockchain was move a digital asset. So like if you're on the Bitcoin blockchain, the one and only thing you could do was mine and move Bitcoin. They had very single purpose. The XRP ledger was designed to be a multi-asset ledger from the beginning, to allow people to move value between parties and systems quickly, reliably, and to keep costs and performance very predictable. XRP was the native asset on the XRP ledger, a digital asset designed for settlement and liquidity. The vision was that it would sort of be the neutral bridge between payments, stablecoins, tokenized financial assets, collateral, and so on. So the idea was that if people were using different stable coins, or they were using different maybe tokenized real world assets, we may not had it quite that crisp back then, but the idea was that there would need to be some sort of a neutral asset that was jurisdictionless, that everybody could hold, whose value could be well understood, that could provide sort of deep pools of liquidity. And the earliest sort of financial infrastructure vision for the XRP ledger was to have deep pools of liquidity that anybody could contribute to and draw off. Because if you think about it, like payments are behind almost every financial use case, right? A loan is a series of payments. If you're trading in equity, it's going to be, you're making a payment when you buy the equity, you get a payment when you sell it. So original role was to be really good at payments and then build financial infrastructure around that. And that's how the network operates. So transactions settle in seconds, cost remains stable even as activity scales, reliability, we've closed tens of millions of ledgers now, perfectly reliably handling real financial workflows, not just experimentation. So I would say, like contrasting it with sort of general purpose smart contract blockchains like Ethereum. Ethereum is designed to sort of do everything, but that has some disadvantages. For one thing, there's a lack of predictability. If you agree to a smart contract, you don't necessarily know exactly what it's going to do. What we did with the XRP ledger is we designed it to have a curated set of best-in-class sort of financial primitives. So if you want loans, they're financial primitives for loans. You want asset exchange, there's financial primitives around asset exchange, tokenized real world assets, multi-purpose tokens, stable coins. For each of these things, the ledger has a single sort of implementation that's a curated best-in-class financial primitive. So while you don't necessarily get the broad programmability and flexibility, you do a certain set of really important things really, really well. It's dependable financial infrastructure, a small set of the actual financial functions people want, and doing them extremely well. So what you see in other ecosystems is you see a lot of experimentation that doesn't really go anywhere. That's like sort of trying to do these weird little niche use cases with smart contracts. Whereas what you see on the XRP ledger is you see tokenized real world assets, you see stable coins, you see asset exchange, you see payments, you see all of the sort of things that people actually need a financial system to do. And what you're starting to see now is mass institutional adoption, which I think is not the sort of end in it. Obviously, it's fantastic. Like, it's a form of mass adoption. It can bring these flows of billions of dollars. But I don't think that's the end case for the XRP ledger or for the ecosystem generally. I think it's an enabler for mass retail adoption. I think the problem with mass retail adoption right now is that blockchains can't do the things that ordinary people want. Like, if you think about the financial things that mass retail wants, they want things like loans, they want things like payments, they want easy access to their funds, they want sensible investments that aren't hugely speculative assets. And I think institutional adoption, particularly on the XRP ledger, is going to enable tools like the XRP ledger to provide for those sort of retail use cases that are going to drive that wave of retail adoption. But in the short term, the enterprise adoption, has been massively accelerating. If you look at on-chain flows, you look at liquidity on-chain, you look at tokenized real-world assets on-chain. That's where the action is right now. But I think very soon that's going to enable that sort of mass retail adoption. So I think the distinction is that the network and the asset were designed together to support real-world value movement and real-world financial use cases, rather than just trying to be everything to everyone or trying to be one very specific narrow thing.
Mm-hmm. What would you say are some technical attributes or settlement speeds, cost predictability, throughput, et cetera, that are most relevant to institutional enterprise users, David?
Performance and cost predictability is really important, as is reliability. I mean, those are probably the two most important things. So those are kind of like table stakes. If you don't have those, you want those high uptimes, you want transactions to complete quickly. But I think there's more too. I think interoperability is important. I don't think any one thing is going to sort of take over the world. Even if XRP takes over the world, it's going to be in multiple places. There's going to be XRP on the XRP ledger. There's going to be XRP on exchanges. There's going to be XRP on ETFs. There's going to be, digital asset treasury companies. It's a number of interconnected ecosystems. So I don't think that like any one thing is going to be the sort of, any one place is going to be where everything is going to happen. So I think interoperability is important, and then regulatory certainty and regulatory expectations, I think, are extremely important. Value needs to move between payments and stablecoins, tokenized assets, collateral, and across different networks. The XRP ledger is not going to be able to do everything that everybody wants. No system will. Just like there could never be one successful internet company, right? There could never be. This is going to be a massive change in the way finance is done if we're successful. And the XRP ledger was designed with that from the beginning, with XRP as this sort of neutral asset to sort of move efficiently between systems. Institutions need to be able to meet regulatory requirements. You couldn't build one compliance model into a blockchain, because there's different regulatory environments that people need to comply with, and even different users have different regulatory regimes that they need to comply with. When I trade on a DEX, the regulatory regime I need to comply with is very different from what Ripple needs to do when it handles an institutional flow. And so you need to be able to support those different regulatory models. XRP has clear guidance from US courts, which has been tremendously helpful in the United States. And of course, the regulatory environment in the United States is much better than it was years ago, across the entire industry. So that allows institutions to evaluate risk and plan longer term integration. So we've definitely seen that huge pivot and a huge growth in institutional adoption very recently.
Mm-hmm. Matt and Stephen, do you kind of see similarities with the technical attributes for institution and enterprises that you speak to?
Yeah, I mean, I really do. The reason I got into this industry in 2016 was because really two reasons. One of them was actually because of what Ripple was doing back then, and that was remittances. I thought that was extremely important, coming from an emerging market debt background. One of the factors that I would always look at when you're evaluating, sovereign credit or emerging market debt was remittances that were coming from other countries into that country. It was for some countries it was a pretty big factor, and you saw how much was charged for people who would come to one place, work really hard, send their money back home, and lose 15% just right off the bat. So I thought that was a area that was very ripe for new technologies. And then, of course, the other one was the tokenization of bonds. And the bond market has always been very, very interesting. It was typically always OTC traded, still is, and but not as efficient as other markets are. So those are the two things that I was most interested in, and you know, those are things that the XRP ledger actually does. So people with a lot of people with TradFi backgrounds will or capital markets background will look at that and say, okay, yeah, this does all the things that I can see disrupting in our market, which is why so many people are getting involved in it. And that's the kind of conversations that we're having, of course, with institutional investors. Is these are the things that they see. This isn't me telling them. This is them telling me, like, this is why we like XRP. And again, we find it extremely fascinating, and we're very thrilled to be a part of it.
Yeah, absolutely. I would just add, listening to David, something really, really struck me, and listening to Steve, which is sort of the race toward really disrupting the fundamentals of how finance in the world just started. And I think that's something that crypto really maybe doesn't get. Sort of, we were in this preparing phase, and people were doing these different things, and they were almost all test nets. It really now just started, where you have mainstream financial groups coming in and sort of interacting with the crypto world. And one of the reasons I think XRP matches their expectations is what David said, which is it doesn't try to do everything. It tries to do really important things really robustly and really well. And that's sort of fit for purpose for where the market is going. And I think that's what appeals to people. They understand they're almost all real world use cases that they're familiar with. They understand the technical architecture choices, and they understand that the game just started, that really we were doing preparation, but now we're in this new regulated real world era, and we're seeing how it plays out.
Mm-hmm. Yeah. I also want to ask David, for on-chain metrics, are there any specific ones that you believe best reflect the real economic activity on the XRP ledger? And then for everyone, what are the big trends you're seeing today on this front, both for the ETF side and then maybe the ledger?
I definitely focus on metrics that show sustained usage and real value moving through the network. Transaction activity is probably the clearest signal. The XRP ledger has now processed more than 4 billion transactions with pretty consistent settlement in about 4 to 5 seconds. At a fairly predictable fee. A transaction on the XRP ledger costs a tiny fraction of a penny. It's not trying to extract value from people's transactions. It's trying to enable people to do what they need to do. Liquidity is another huge factor. XRP is a top 5 digital asset by market capitalization and has been for, I think, 10 years now. About $109 billion deep global liquidity for real financial activity. That depth matters. And then, of course, the XRP ledger itself is now one of the top 10 blockchains for real world activity this year, with a rate of increase that's just absolutely astonishing. From a use case that was, almost unthinkable just a year ago, we now have institutional issuers like Guggenheim, Ondo, Aberdeen, Franklin. And it's not just issuance. It wouldn't be super exciting if they were just sort of issuing an asset on chain that just sort of sat on chain in the hold, with the same holders. What's interesting is that these assets are actually moving and settling on chain. So the financial activity is getting the benefit. They're not just using the ledger as a database where they could use any database to hold who holds their assets. They're actually using it as financial infrastructure to allow these assets to be able to move and settle. And I think that's really a demonstration of the ledger's fit for purpose. I think also retail growth is interesting too. I think we're on the cusp, because as I was saying before, we can't really provide today exactly the features that most retail users need. So we're capturing the users who really like the technology and who have people who want to gamble essentially and try these high risk trades. But obviously that's not how we're going to take over the world. We're going to take over the world with solid financial products that solve real world use cases. And we are actually starting to see that now enabled by things like stable coins and tokenized real world assets that let us handle these use cases like payments and like reasonable investments, tokenized money market funds and treasuries. We've actually seen more than 500,000 new wallets created by retail users through applications like Salmon. And so we're starting to see that sort of institutional activity driving retail adoption, which I think is going to be over the next year or two. I think that's going to be the dominant theme.
Matt, Stephen, how should institutional investors interpret on-chain adoption data when assessing long-term value? Like, what matters most, and then what would you say is most misunderstood, especially following what David said?
Yeah, it kind of depends on the quality of the data. I took a stint away from Wall Street for a couple of years in video games, and one of the most interesting things about tracking people that play online games is the quality of the user. I mean, one game might have a ton of users, but they could be what you call a non-coiner, a no-coiner. They're not actually spending any money. And then there's a small portion that are actually spending money, and those are the valuable users. So the data itself is important, but the quality of the data is more important. So it depends on what these users are actually doing on chain. I think that's what people are going to have to really dig into, whether it's XRP, whether it's Bitcoin, whether it's Hedera. And but what we're seeing on the XRP ledger is some people will point, it's like, well, there's not as much volume or data being transacted. Well, the volume and data being transacted is actually highly valuable and sophisticated on the XRP ledger. So that's what I think people should really be looking at.
Yeah, I would agree with that. I also think early in the development of any industry, you want to see multiple different types of people doing multiple different things. And you definitely see that on the XRP ledger. And you want to see them have a consistently good experience, which means the sort of liquidity in various corridors, the fee consistency, and sort of spreads and just you want those to be extraordinarily tight. To a certain degree, the high quality user experience is the most important metric, and arguably more important than sort of vanity metrics about gross volume for the reasons Steven said, which you can buy that on different chains and it can be very short-lived. You want to see that organic traction with good experience in real world applications. And even if that's smaller in size, that's actually more important because that's the $100 trillion market that we're actually interested in.
Mm-hmm. Yeah. Well, what characteristics would you say makes XRP investable today from an asset manager's perspective? You brought up liquidity, Matt, but is it liquidity depth, market efficiency, custody readiness, or some underlying use case durability or something else?
Yeah, it's really just two things. You have to be able to access it in an easy format with high quality custody. That's the ETF answer that Steve and I are providing at Canary at Bitwise. And then you need a large TAM, right? The thing about crypto is we're still early. So you need a large market that it's going after. That's the most important thing. If it's going after a small niche market and it's highly penetrated, who cares? It's not interesting. So you need to be able to reliably hold the asset in a relatively low cost way that you can feel safe and secure in doing. And then you need a large addressable market that it's going after and has a reasonable chance of getting and a way of tracking that progress. When we speak to institutional investors, that's what they care about. They want to see crypto assets that are going after large TAMs and where they can hold it safely at relatively low costs. You can definitely see that in the XRP ecosystem.
Yeah. I think I mentioned this. I may have mentioned this on one of your shows, Jackie, or maybe I didn't. But I remember when I was a bond trader 15 years ago, this thing called Market Access came out, and it was essentially a system to where you could trade small odd lots of various bonds, much like you can in a brokerage account. So it was more designed for institutional traders. But the goal of Market Access was to eliminate the need to constantly pick up the phone and call and make OTC trades, which is, by the way, still the way that most bonds are traded today. It's not on a sophisticated system. Just certain ones are, and I think XRP Ledger addresses that type of issue. And people see it. So if we can begin to transact other types of real world assets. And when I think about real world assets, I'm thinking, a lot of people think real estate immediately, right? Real estate tokenization has been tried, 100 different ways over the last 10 years. And it's actually the thing that I'm not impressed by, because there's a tax efficient way to trade real estate, and it's called a REIT, and they're publicly traded. And so I'm not as impressed there, but I'm impressed by the things that don't have a liquid market, and those things include bonds. They include other types of assets that you might put a bond wrapper around, like airplanes, container ships, locomotives, cell phone towers. Those are the types of real world assets. Particularly the ones that generate income. Those are the ones that are extremely important. And when you look at the features of the XRP ledger, all of those things can transact there. And so I'm seeing a massive opportunity that is coming very, very shortly to start trading those real world assets. I believe the first step was the stable coin. That's the first easiest thing that you can do is launch essentially a money market mutual fund that doesn't provide a yield, so that you don't have to register it as a security and trade it around. And of course, laws have now been passed that allow you to do that. The next step would probably be a real money market mutual fund where you actually get the yield. And then beyond that is other types of assets like bonds and real world generating, income generating assets.
Mm-hmm. David, we got a question from one of the listeners that said, what are the other things that the ledger can do other than tokenization or transfer of funds? From someone named Tomasi, if you have any thoughts on that.
I think they're going to be financial use cases. They're going to be things like loans. I think one of the most interesting things is what Stephen mentioned, which is things that provide some sort of yield. One of the things that's really missing in the blockchain space right now is like rational, sensible investments, like the way that you would have a retirement fund, or the way that you would have, the way that you would store your money. And I think particularly internationally, in the United States, we're a little bit overserved. We have so many investment options, but there's a lot of places in the world where there aren't great investment options. And so I think these types of things like tokenized treasuries, tokenized money market funds, I think there's a tremendous market for them. I think even things like NFTs, which kind of they've kind of gotten a little bit of a bad rap because they've been used for not that there's anything wrong with collectibles. I mean, collectibles is a huge market, but it's not really a financial use case. But I think around income generating assets, around things that are investable assets, I think those types of use cases are interesting too. So I think you can think about all of the things that people do in the financial system. I think particularly things around loans and yield generation and payments, trading. I think you're going to see people using blockchains over the next couple of years for all of those kind of core financial use cases. I think it's going to be pretty disruptive to the traditional financial system.
Nice. What else do you think that differentiates an XRP ETF from other single asset crypto products in terms of return drivers? Is the thesis more tied to adoption growth, transaction utility, or macro liquidity cycles? Or I'm just trying to get kind of your perspectives on really how it is different from others.
Well, in my opinion, it's all of the above. All of those are factors right now, and just a lot of people don't hear this being mentioned, but right now one of the biggest drivers of the AUM growth has actually been the basis trade. So the basis trade for some other assets, other crypto assets, collapsed over the summer, which caused prices to go down and outflows to be experienced, particularly in the Bitcoin ETF. And the basis trade for XRP is actually pretty decent right now, better than most. So we're seeing a lot of AUM driven from hedge fund managers. That's just one factor, and I wanted to bring it up because not a lot of people talk about it. But the long-term factors are going to be the growth. One of the things that Ripple did that I think a lot of insiders talk about, but it's not really broadly talked about, is the acquisition of Hidden Road. That is an amazing platform, an amazing group of people that are building really cool things, particularly in the areas of securitization. So I believe once they really get rolling and working on putting real world assets on the XRP ledger, you're probably going to see a massive increase in user acquisition, user growth, as well as volume. And when I say volume, just volume on the network. So I really can't wait for that. But those are probably the two biggest factors. It's just user growth, and then various reasons why people trade, whether it's the basis trade, whether it's global liquidity, which, by the way, global liquidity is continuing to grow and will continue to grow once we have a new Fed chair. And Japan's been kind of breaking the mood a little bit by raising rates, but in Japan that's needed right now. But the rest of the world, central banks are lowering rates and are buying assets on their balance sheet, which is causing an extremely high growth in global into monetary supply. And there has been a strong correlation between most large crypto assets and global M2. So that's one of the factors why I believe there's potentially a divergence here, and you're going to see things like XRP grow in 2026.
Yeah, I would agree with that. Even in Japan, they're sort of pressing the gas and pumping the brakes at the same time, doing stimulus and rate hikes because they have different views of what they need to achieve. I do think the monetary outlook is good. The only other thing I would add on the XRP front is we talk to a lot of non-crypto native investors, people who are really from the TradFi space. And one of the things we haven't talked about that I think makes them want to include XRP, I'll say something sacrilegious here, amongst other assets that they own, is that it's a very differentiated sort of architecture and approach to the market. And in an early disruptive area where the future admittedly is unknown, no one has a perfect forecast of how this blockchain tokenization stablecoin world will play out. Having very different architectural choices is appealing to these investors, right? They've lived through having Betamax and VHS. They've lived through having iPhones and Android phones. They want different architectural choices. One of the things that's really nice about XRP, and the reason we find a lot of people say they need to include it in their portfolio of assets, is it's a different architectural choice with clearly different drivers. I mean, Steve was talking about Hidden Road. There's no analogous story to that in other blockchains, right? We could talk about the Ripple stablecoin. There's no analogous choice. We could talk about the bank charter. There's no analogous choice. So people like those different architectures. Makes it nice from a basket perspective to include as part of their mix.
Mm-hmm. David, what are your thoughts on that from an architectural standpoint?
I think Ripple's presence in the ecosystem is a differentiator, and I think us positioning ourselves as sort of like digital asset infrastructure. We launched the stablecoin for those use cases where stability in price is an advantage, whereas volatility is a disadvantage. And of course, people have XRP for those cases where volatility is an advantage, or you need the sort of neutrality and the jurisdictionless aspect that XRP has over stable coins. I think that's about it.
Okay, fair enough. Short and sweet. I love it. Where are you guys all seeing credible enterprise or institutional adoption of XRP today? Is there any specific, stories, anecdotes, use cases that you're monitoring or hearing?
Yeah, I mean, I think the biggest one that I'm watching carefully is the stable coin, RLUSD. And we're just seeing, I mean, there's obviously the two biggest stable coins, Tether and USDC, were first to market. They grew very quickly because they were really the only options for what they did. And subsequent stable coins have struggled getting a foothold in the market. It takes a very long time. I'm watching this one grow very quickly in a competitive market, mainly because of cost, speed, and security. So that's the one thing I'm watching very closely as a tell on whether or not the other assets that are coming will have adoption and volume. And I believe that it will, based on what I'm seeing.
Yeah, I love that example. I'd love to hear David's examples. We also track measurable, meaningful partnerships because, again, our view is we're so early in this development that each one of those shots on goals is incrementally important. So we're following each of those pieces of deal flow because I think it builds more opportunities depending on how this plays out.
Mm-hmm. David, what are your thoughts on that front? Yeah.
I think an interesting institutional add to the sort of XRP ecosystem specifically, not just the XRP ledger, but XRP specifically, is Evernorth, which is a digital asset treasury company based around XRP, backed by companies like SBI, Ripple, Pantera, Kraken. And they're actively managing XRP holdings through yield generation, capital market activity. They're raising funds primarily for open market XRP purchases as a real, institutional XRP treasury. And it's going to be interesting to see what yield generation strategies they can come up with, and how successful they can be doing that. And they're going to be active participants in the XRP ecosystem, so they're not just going to be like they're not going to be just doing little financial things to optimize yield for their investors, but they're going to be participating as a validator. data, provisioning liquidity, integrating with DeFi protocols such as those using RLUSD. So I think it's interesting that we're going to have a new sort of institutional participant in the XRP ecosystem, and not just as a sort of financial, not just moving money around, but also like looking for solutions on the XRP ledger and within the ecosystem to generate yield for their investors.
How do you guys think institutions should think about XRP's role in emerging financial infrastructure, particularly in areas like cross-border settlement, liquidity, positioning, and like tokenized assets?
I guess I'll go. Institutions should think about XRP as a piece of financial infrastructure and a neutral settlement liquidity asset connecting the financial system. XRP moves value quickly in cross-border settlement between currencies and payment systems. There's no need for pre-funding. There's no need for long settlement cycles, and you don't have this complexity of positioning different assets in different places. For liquidity, XRP plays a central role as more assets come onto the XRP ledger. Assets like stablecoins, tokenized financial assets, wrapped cryptocurrencies. They're native to other blockchains. You need a liquid, neutral asset that anyone can hold, that's jurisdictionless, that can sit between them. And XRP fills that role both on the blockchain and off the blockchain. Helps markets function smoothly where there isn't a direct trading pair. I think it's interesting to call out some of the XRP ledger features that sort of give XRP a special place on the XRP ledger. One example is auto bridging. So the XRP ledger will automatically look for bridging through XRP when there isn't a direct market between two assets, which improves liquidity and pricing. And so there's structural advantages to trading XRP on the XRP ledger over other assets. As real-world assets move on-chain, XRP will be used to settle and move value across those different assets and systems. And I think the growth of the XRP ledger, and given XRP's privileged position on it, is a key growth area for XRP and the XRP ecosystem.
Yeah. One of the things that's top of mind is, I had a call this morning with the Axelar team, and there was some interesting developments at Axelar. Primarily they were building a lot of cross-chain systems on the XRP ledger, so that you can move RLUSD between chains, but it's really a bridging system. And then there were some changes at that team, but on the call today, I got assurances that the actual team that built a lot of that is still there, and the ones and then a couple of people that moved on are still supporting that network. But really, these other projects that are building things around the ecosystem is extremely important. So when you talk to dev teams, that in my opinion are some of the smartest people that I've met on that particular team, and some of the other ecosystems that are building on and around XRP Ledger, that matters to me a lot. And I was really pleased to hear that project's continuing, and that they're continuing to build bridges between various assets.
Yeah. I like to invert the question a little bit and jump all the way forward to imagining the world that we're describing, right? A world where finance moves primarily over blockchains, where it's truly global and national borders break down, where there are multiple different regulatory requirements and multiple different users from retail to institutional using the same platform, and then work backwards for what kind of financial infrastructure you need. And I think when you do that, you really can easily arrive at XRP as this bridge asset between this enormous web of differentiated liquidity that's all sort of meeting together almost on an intermediated peer-to-peer basis. It's helpful for me to sort of jump forward to that future world that's really global and really different from the world today. And I think when you do that, you can sort of work backwards to what kind of financial infrastructure you need. And when I do that, XRP really shines in that sort of moment.
Yeah. I think looking to that forward future, let's say 12 to 24 months into the future, which is a long time in this space, what milestones would you say matter the most for XRP's institutional trajectory? Whether it's
I think absolutely. It's a great question. I won't say anything surprising here. I think you'll be looking at the growth of the stablecoin RLUSD. I think you'll be looking at the growth of tokenized asset transactions. I think you'll be looking at the real world deal flow, as I mentioned, that is still really important to me because we're in this early stage of the ecosystem. And then other things that will be ancillary. I do think the growth of ETFs is a good proxy for institutional interest in this space. And I think you'll be looking for that to grow as well. And then more broadly, I don't have a precise way to measure this, almost measured by feel, but you want to look at liquidity broadly in this ecosystem, both on chain and in the asset itself, because I think that speaks to the strength of the ecosystem. So we look at that as well.
Mhm.
I mean, one of the things that I want to see, and this is kind of like a hint, hint, wink, wink to David, and more than likely, you guys are probably already working on it. But given the success of RLUSD, what I want to see is other stablecoins in other currencies globally that have a connection to RLUSD, so that there's immediate there's an immediate trade between them, right? I think that would really help with remittance payments and global monetary transfers. But if I saw something like that, then I would just kind of throw my hands up in the air and say you won.
Yeah.
Is it
I
in the
also
works,
like
David?
maybe. I definitely keep my eye on milestones that relate to XRP itself becoming embedded in real financial workflows, where XRP is used for settlement and liquidity, and also for areas like collateral management, which is something that we're looking at both RLUSD and XRP through the acquisition of Hidden Road, and now Ripple Prime and G Treasury. We're really looking at using XRP as a means of collateral, as a pledged asset for lending and margin related workflows, cross asset margining, all those kinds of interesting use, all those kind of things that surprisingly the current systems don't really do all that well. Institutions need assets that they'll settle quickly, that they can move and pledge. And so I think those things are interesting to see. I think it's also interesting to see XRP growing in DeFi. It's sort of slow. Retail DeFi has been a little bit slow. I think as enterprise adoption enables that kind, you're going to see those growth through, companies like Doppler Finance and Flare, Uphold, all building DeFi on the XRP ledger. Wrapping XRP to move to other ecosystems. I think it's also important, as I mentioned before, like there's an ecosystem of ecosystems. You can use XRP on the XRP ledger and it's native there, but there's wrapped XRP on other platforms, like Solana and Ethereum. And so you're going to see other ecosystems in which I hope you'll see institutional use of XRP as a collateral asset, as a settlement. And then, of course, a milestone to look at is the growth of ETFs. The days of consecutive inflows, the total assets under management, the number of ETFs and how successful they are, I think is going to be a real metric to keep an eye on. That's a sort of proof of institutional interest. That's a proof that these things are real, because you can get somebody to do something on a blockchain and they're not really doing it because they have any, they're doing it because you sort of ask them to, and it's not a real thing. But I think the growth in ETFs is a demonstration that people who are looking closely, find the growth scenario credible. They believe that there's real transformation possible there.
Mhm. Yeah, building off David's point there, as digital asset ETFs proliferate, for Matt and Steven, do you kind of expect institutional capital to concentrate into a small number of assets, or will it be really diversified across functionally distinct networks, like a bunch of them?
Look, I think you're broadly going to see growth in crypto ETPs generally. I think you'll see growth in index ETPs, and you'll see growth in high quality assets. Maybe the interesting differentiation versus the existing crypto market is, I think, ETF buyers are new to the market to a large degree, and they're making 2025, 2026 choices. So I think there'll be some assets that don't pick up significant inflows. And I do think, every time someone buys something like XRP today in an ETF structure, they're underwriting it from this price. They're making a strong commitment that they think this price is a good entry price. And so I think what you're going to see is more differentiation than you see in like the rank of assets. But I think you'll see multiple winners. I think there are appealing, and I think there's not one chain to rule them all. I think there are multiple use cases that are interesting in crypto.
Yeah, I mean, I think about when I go, buy a car, right? There's a lot of different brands. There's a lot of different types of cars. There's things that function for different things. I mean, I drive a truck, right? Because I'm kind of a redneck out in Tennessee. So just like that, a lot of protocols will look and act differently. There'll be winners for various categories. There'll be multiple protocols that work in various categories. I mean, if you think about more like consumer protocols, is kind of the way that I think about things like Ethereum and Solana and Injective. SWI. There's a lot of room for people to pick their chain, right? And then when you get into things like very strictly financial rails, I believe XRP is one. Financial rails, there's a few that are out there, and there's competition's good. Enterprise, I believe that Hedera has won. Enterprise. They've also been around for a while and have built something that's unique. So there's a lot of different functionality that people are looking for, and and the ones where there's either a clear winner or a group of strong contenders, leaders, winners. I think those are the ones that are going to do well. And then of course there's also the future, right? When a technology is built, and if it's a great technology and if it makes money, then you're going to get competition. You're going to have other people coming in and building things that are quite interesting, which is why we also look out a little bit and try to find protocols that might be the next winner. What's something that's up and coming that can build on things that have already been built. So we're constantly looking at that, and so sometimes and look, when you launch ETFs, when you're in the business of launching ETFs like Matt and I are, you're creating a slate. You're not just betting on one thing to win it all for you, and you're creating a slate based on where you believe the market's going, where the market is now and where the market's going to be. And sometimes you might launch something that just that doesn't raise a whole lot of assets out of the gate, but if you've got a long-term belief in it, and you think that, hey, this isn't something for today, this is something for 2 to 3 years from now, you'll hold on to that until something changes, right? So I do believe that there'll be probably a good dozen single token ETFs that do really well, and then beyond that, it's going to be onto indexes. One of the indexes that I believe in the most, that that I personally have money in, is one called BitW. I can say the ticker, Matt can't, but or he can. He just has to attach.
Don't get him in trouble. Yeah.
But I can say it. It's one of my favorite ones, and it probably actually is my favorite one in crypto. And I personally own it and trade in it. So that's the next iteration is really going to be indexes, and we'll do an index later that'll be probably less broad, but I think that's really the next step beyond about about a dozen single token assets that are going to do well.
Thank you, Steve.
Yeah.
Anytime. just send the check next week.
All right, last thing, guys. We've covered a lot of ground here on the front of XRP ETFs, institutional enterprise adoption, all these things. On the front of XRP ETFs, if they continue to scale, how do you kind of expect that to impact liquidity, price discovery, institutional participation in the underlying spot market?
Yeah, it's a rising tide that lifts all boats. What you want in a liquidity ecosystem is multiple different products and multiple different vectors. So the rising liquidity in XRP ETFs is going to help liquidity in the underlying. If we see significant growth in options on those ETFs and other things, which I think we'll see, that will add yet more. Liquidity begets liquidity. So this is strictly a good thing. Another thing that people mistake with ETFs, which the track record is pretty clear, both in crypto and then even if you go back to things like precious metals ETFs way back in the early 2000s, is that people don't just buy the ETF. So a lot of the people coming into Steve and my ETFs are going to end up also owning XRP directly in wallets and participating in that part of the ecosystem. So it really is just one more piece of the puzzle, and liquidity begets liquidity is what we've seen.
Steven, David, don't jump on it. David, maybe you go ahead.
Well, I definitely agree. I definitely think that there's an ecosystem of ecosystems, and everything is accretive to everything else. I think people using XRP on other blockchains is accretive to liquidity, it's accretive to value. And I think the most important thing is accurate price discovery. That's one of the things that scares institutional users away, is a lack of accurate price discovery and high volatility and sort of unpredictable shocks. And I think these types of real world use cases and these types of adoptions by things like digital treasury companies, direct adoption, all of those things will help for that better liquidity and better price discovery. And I've never seen that be a bad thing. I've always seen that be, just additional value to to all of the different things that people use digital assets for. And I think it's important, like when you're looking at an asset like XRP, not to overly focus on any one thing. Even the XRP ledger, which is obviously an extremely important part of the ecosystem, but XRP is also used on exchanges. It's held in treasuries. It's used wrapped on other blockchains. So there's just all of this is sort of accretive to the liquidity, the price discovery, and the ability to use it for use cases like collateral payments and so on.
Mhm. Yeah. Amazing. Well, thank you, David, Matt, Stephen, for taking the time to share your insights today, and to everyone for listening in. I think we have over 10,000 people right now, so thank you to the audience as well. We're looking forward to diving into XRP and the Ripple ecosystem again next quarter.